you ready to invest in shares, but you are not sure where to start? Before you dive into the stock market, there are a few key things you need to know. Welcome to this channel. On this channel, we discuss topics relating to your personal finance as well as your personal growth. Please like, share this video if you find this helpful. Also remember to click the subscribe button down below. Let's get into it. So the first thing you need to know is that a share, when you say a company, you want to buy the shares of a company, it simply means you are buying a part ownership of that company, right? So before you invest at all, there are a few criteria, the things you need to check out for before you start investing, right? The first one that you need to consider is the financial stability of the company. Now, for you to determine the financial stability of the company, you can look at this. You can check if the company has a robust financial health, right? If the company has a strong balance sheet. You can also check if the company has consistent income over time. You also want to check if the company has positive cash flows. Now, in this video, we are not going to dwell too much on financial health and how to determine financial health and a strong balance sheet. But the basic way to determine is to use financial ratios. You can use financial ratios such as determine the earnings per share and also determine the dividend per share. We will not be dwelling too much on that. Now, for a company to have consistent income, take a look at this company's income statement that I have on my screen. Now, basically, most companies compare the previous year and the current year. So this year has 2020 and 2021. Now, if you look at income for the year, you can see that there was an increase from 2020, that's about 14.2 million to about 43.8 million, right? So typically you want to check, you can take for instance a 5-year financial summary of a company in the last 5 years to check how their income, if they have been making income in the last 5 years, right? Now the next thing is to check also the cash flow of the company. Let's use an example right here. Now look at the cash flow of this company, XYZ Corporation. You can see typically a cash flow statement is divided into three. You have cash flow from operating activities, as you can see that. You also have cash flow from investing activities as well as cash flow from financing activities, right? Now, your cash flow from operating activities typically should be in positive. You should have a positive figure. Now, if you look at that, you can see there's a net cash provided by activity, which is 220,000. It's a positive figure, right? Now, that means that the company's core financial function, which is its operating function, is doing well and has some cash flow coming in. Now, let's take a bottling company or a drinks manufacturing company, for instance. A drinks manufacturing company will have revenue made from producing drinks. It could also have income, which we can term as other income from, say, rent or maybe any of their property. But in this case, their core operating function is production of drinks. So that is what you'll be looking at in your financial statement. Now, if the figure is positive, that means the company is doing well. Now, you also look at the cash flow from investing activities. Now, you can see that the cash flow can either be positive or negative. Now, if the company's cash flow from investing activities is negative, for instance, it's investing in buying property, plant and equipment to, for instance, for production or purchasing marketing securities. Initially it might be negative. That's okay, because it might just mean that it's investing, but it might not recoup that, or it probably might recoup it in the next few years. So that also is okay. You also want to check cash flow from its financing activities and ensure it's also positive. If the cash flow, the change in this case is 10,000, if the change is 110,000, so if the change is not too much, then you can assume that the company is not really relying so much on financing from outside sources, right? So now let's look at cash at the beginning of the period is 50,000, cash at the end of the period is 160,000. So there is a difference of 110,000, which means the company has gained a cash flow of 110. That means there's a constant cash flow, which is positive. So that is a good outlook for a company that you might want to invest in. Now, the next thing you want to check is if the company has a competitive advantage. Now, for you to say a company has competitive advantage, it simply means that competitive advantage is that thing or what they do, the company does to give it an edge, right, over its competitors in the same field. Now, competitive, to determine competitive advantage, you can determine it in various ways. You can check if the company has a unique product or service. Does it have a unique product or service that stands it out? Is the product of good quality? Is it innovative in terms of production wise? Does it have a good brand strength? You want to check that the company has a good brand. Does it provide good customer experience? You want to look at cost of production. Does it have the low cost of production compared to the profit that it's making? Is there a good profit margin? You also want to check, like I mentioned earlier, does it have a strong brand? Does it have a strong reputation in the market? There are some companies that when you mention their names, you can say yes, you can identify with the company, you can identify the brand, that yes, this is a strong brand because they've stood the test of time. You also want to check if the company uses good technology, like instead of technology, they are top notch, they use good technology in their production processes or in providing their service. Now, the next thing you might also want to check, the third one, is the growth potential of the company. Now, before I continue, just hit the like button, share this video if you find it useful. So, as I was saying, we're talking about the growth potential. Does this company invest in companies that have a growth potential? That means they show a trajectory, a good trajectory for growth. There's an opportunity for growth. Such companies are driven by innovation. They are always innovative. They are always looking for new ways of doing things. You also want to check the revenue growth. How consistent is it? Is it accelerating? Now, like I mentioned earlier, in terms of the income the company is making, you want to check over the years, say minimum period of say 5 years, to see if it has consistently been making profit or income. Now, you also want to check if the company's profit is accelerating. Now, take for instance, the company made 10 million in say 2015. Now, in 2016, it made 20 million. That's an increase from 10 to 20 million. In the next year, it makes say 25 million. The following year, it makes 30 million. You can see there's an upward increase. It keeps increasing its rate. So that is a very good company that you might want to consider investing in. Also, you want to check the profit margin. Does it have a good profit margin? Right? So we've talked about 1, financial stability, 2, competitive advantage. We've also talked about growth potential. The next one you might also want to look at, which is also very important, is to check if the company has a strong management. Does it have a strong management? Who are the people leading this company? That also has a lot to say about the kind of company it is. Now, you trust in companies who have strong and competent visionary leaders who know where they are going to, who know what they are doing. They are strong and most of these leaders will tend to emphasize on innovation strategy. They have a long-term strategy of where they want to see the company, how they want to see it grow. There's a clear growth strategy. You cannot miss it, right? They also want to think of ways of entering new markets. They want to launch new products. They are basically thinking of expanding the company. You can also check the profile of such people on the board of the company. When you open the prospectus, the financial statement, there's a section that shows the board that talks about who the board members are. You can read their profile. Reading their profile, you can check for if they have experience, what they have done in their previous field of endeavor, what they were able to achieve. These are pointers to show or to tell you what kind of management or people who are leading this company. Now, the final one, which I also want to discuss here, is to check the dividend history. You want to check, does this company have a good dividend history? In the past few years, has it been consistently paying dividend to its shareholders? Now, for companies that consistently pay dividend to the shareholders, this might be a good pointer for you to invest your shares in. You want to check if they have a record of not only paying dividend, they are also increasing their dividend. You want to check that it has shareholder commitment, is committed to its shareholders, and it has a strong financial health, just like we discussed under previously. I hope these few points have been able to give you an idea of how and what to check for any company that you intend to invest in. Till I see you next time, take care. Don't forget to share this video, and click on the subscribe button below. Cheers, take care, and bye for now.